Nigerian economy will contract by 7.3% in 2020 if the average crude oil price slumps to $15 per barrel in 2020 and Nigeria's crude oil output averaged 1.3 million barrels per day. NESG noted that this worst-case scenario will be driven by persistent escalation of the spread of COVID-19 with its attendant restrictions on economic activities. The projection is contained in the NESG's report titled Macroeconomic Outlook Update COVID-19, Global Oil Price and the Nigerian Economy, released yesterday. The group said the occurrence of the worst-case scenario would drive the country's real gross domestic products deeper into recession. Real GDP will decline by 7.3% in 2020. Investment level as well as government revenue will decline significantly by 65% and 63% respectively in 2020. Inflationary pressure intensifies as inflation rate averages 18.4% in the report, as was noted. However, the report assumed that the best-case scenario for Nigerian economic projection for 2020 in the light of COVID-19 pandemic will occur if the global oil price will experience stability and average $35 per barrel in 2020 from the current $25 per barrel at the end of April. The report also noted that this scenario will be above the revised 2020 budget benchmark, and the best-case projection will thrive on the assumption that the spread of COVID-19 will be contained to enable major economies to resume production, while the tension between Saudi Arabia and Russia will be resolved with an agreement to cut oil output. Quoting the NESG, in terms of production, this scenario assumes an improvement in crude oil production to settle at 1.3 million barrels per day following renewed demand in the market, the relative peace in the Niger Delta region, and recent commitments by the leaders of the National Assembly to begin work on the different aspects of the petroleum industry bill. This morning, we'll continue our conversation in the Economy and Politics show, and we'll be looking today at post-COVID-19 prospects for deepening financial inclusion in Nigeria. I have a guest, a program specialist for the Enhancing Financial Innovation and Access, EFINA, Mr. Henry Chukwu, joining us to discuss this. Good morning, Mr. Henry Chukwu.
Good morning.
And how are you today?
I'm doing great, and you?
Yeah, nice to really have you. I mean, we know how EFINA has been working assiduously to see that financial inclusion is deepened through research, to innovation, to partnerships. And it's nice to hear what is happening at this period, particularly during the pandemic.
Thank you. It's a pleasure to be on your platform.
Yeah, first, Henry, I mean, you look sparkling, but let's just let us know how the experience has been for you, this period of the lockdown, and is beginning to ease in Nigeria and other parts of the world.
It's been crazy, but we're beginning to learn how to adapt to the new way of working. As you can see, I'm working from home.
Yes, I can see very well.
You can see, yeah, exactly. So we're coping. Yeah.
Okay. Nice to get that feedback. Remote working is also now becoming a very new normal in terms of strategy, in terms of engagement, in terms of productivity. And those are things that we talked about, but now this has reinforced that, and we are seeing that happen in our time. Very interesting. First, let's get to see how COVID-19 has impacted Nigeria's 2020 financial inclusion target. We're looking at a 20% exclusion rate in 2020. That has been the buzzword discussion from all stakeholders, also pushed by EFINA. How will this pandemic affect financial inclusion targets for 2020 in Nigeria?
I think it's going to really affect the actualization of the target. I think we are less likely to achieve the 80% financial inclusion by the end of the year, considering the effect of the pandemic. The government measures to curb the spread of the virus is having sweeping effect on the low income and businesses and individuals. Most of these individuals and businesses, they rely on daily transactions to earn their living, to earn their income. According to EFINA Financial Access to Financial Survey 2018, about 44.3 million adults own businesses, and about 23 million adults earn their income on a daily and weekly basis. So if you look at that, considering the restriction, the measures placed by government, a lot of them are actually, the measures are actually affecting them in terms of the income. It's affecting, diminishing their income and affecting their activities. They're not earning much. And this has potential to really push a lot of people to the exclusion strand. I think really it's going to be difficult for us to be able to achieve the financial exclusion. But beyond that, looking at the data, the target is to reduce the exclusion rate by 20% by the end of the year, right? Yes. And currently the exclusion rate stands at 36.8%, leaving a deficit of about 16.8%. The question is, can we close this gap by the end of the year? Which I think is going to be difficult. Looking back, between 2016 to 2018, the exclusion or population declined just by 4.8%, from 40.1 million adults that are financially excluded in 2016 to 36.6 million adults that excluded in 2018. If you look at that percentage decline between 2 years, I think it's going to be difficult for us to be able to achieve close the 16.8% gap by the end of the year.
Yeah, and part of the reasons why this financial exclusion prevails in continents like Africa and in climes like Nigeria is the issue of poverty, which you've always highlighted in your survey. And recently, the National Bureau of Statistics released a report published on ProShare talking about the fact that about 82.9 million Nigerians are living below the poverty line, and also that percentage accrues to 40.1%. From your analysis and looking at the situation, this, of course, will be an impediment, will be a challenge, really, to deepening financial inclusion. How are you working with your stakeholders to see how this can begin to spread and really deepen to the rural areas? I know that you're working with the Shared Agents Network Expansion Facility, SANEF. You also have the Central Bank coordinating the National Financial Inclusion Strategy. How will this particular factor impact the quest to deepen financial inclusion, and what solutions are there to explore?
I think generally the focus now is how to ensure and build resilience of financial services providers, agents, and individuals to cope with the effect of COVID-19. Right. For EFINA, our focus has actually been pushing a lot of efforts around publishing, providing credible market information that could support financial services providers in delivering financial services within this period in a safe manner. And at the same time, some of these market information could be leveraged by policymakers to come up with policies that could support the financial inclusion agenda. So we've been working closely with various stakeholders. We've been engaging actively with various stakeholders. You rightly mentioned SANEF, mentioned Financial Inclusion Secretariat, and other stakeholders as well, to understand, to look at, identify opportunities where we can harmonize efforts to continue to deepen the access to financial services in Nigeria, especially among the underserved and underserved population. We've been working closely with them, and I know for other stakeholders as well, they have been doing a whole lot to sustain the financial inclusion efforts. I'm aware that some financial services providers some of them are actually giving fees waiver. Some as well have optimized their digital channels, supporting the agent network to continue to provide services. CBN, on the other hand, have rolled out several initiatives to support, continue to push the financial inclusion agenda as well, cushion the effect of COVID-19. If you're aware of the 50 billion targeted credit facility stimulus targeted at individuals, households affected by COVID-19. And at the same time, they have also reduced the interest rate on government intervention facilities.
And still speaking on this factor, I appreciate what people are doing in EFINA, engaging the stakeholders. But speaking on this factor of poverty, which is a really big issue and challenge in the country, from your recent report published on ProShare, look at COVID-19 and its impact on the financial inclusion and activities of financial services agents. We're going to see declined transactions for financial services agents. We're also going to see limited support from financial service providers, which needs to improve. And we're also seeing the challenge of the remote work that they have to carry out in the rural areas. What would you be saying? These are challenges. What other challenges are you seeing, and what are the steps that we can take to address this?
Generally, I think beyond what you just mentioned, the major issues that are always been on decline in income of people because of the low economic activities, people losing their jobs, which I mentioned before now has the potential to expand the exclusion strand. At the same time, as you rightly mentioned, limitation in terms of the new way of working is also affecting some business-based agents as well. For me, I see opportunities despite all of these challenges. I think this is an opportunity for the industry to leverage the palliative measures being provided by federal and state governments to deepen financial inclusion in Nigeria, drive account opening, financial literacy, financial capability amongst the beneficiaries. This approach will, as well as I mentioned, will drive not only cushion the effect of COVID-19, at the same time contribute to Nigerian financial inclusion agenda.
No, I just heard what you said about the palliatives, and like you rightly said, financial services agents are very, very effective avenues for reaching out to people, particularly in the rural populace. The National Social Register, some state governors said it wasn't giving them that required data they needed to reach out to their people in terms of palliatives. So have you been approached by subnationals or even some of the MDAs to see how we can work out a more robust approach to palliatives alongside the other stakeholders? And what can, based on what you've seen from the government and even the subnationals, what can be done more to really deepen these palliatives or support to people at this time, particularly the informal sector, using their financial services agents and other mediums that will help also improve and deepen financial inclusion?
As I mentioned before now, we've been engaging with a couple of agencies to see how we could support, including the Federal Ministry of Humanitarian Affairs. As you rightly mentioned, financial services agents, they are the veritable rail for providing financial services. And over the years, they have been really active in terms of supporting their communities, extending access to finance to them. And I think they actually the right platform to use to push some of these palliative measures to households. They live in communities, they understand, they know themselves, they know the people within the community, they understand, they know the households. I think that the government and agencies currently doing a form of cash transfer program, distributing one or two palliative measures, could leverage agents to really drive the implementation of those measures. However, there is need to as well to build the resilience of agents to be able to perform those activities. And this could be because at the same time, as I mentioned before now, while they are providing these services, they also exposing themselves to the possibility of contracting the virus, right? So there's need to build their resilience, enlighten them on precautionary measures they could adopt to protect themselves, customers, and at the same time reduce the spread of the virus. There's need to as well come up with other initiatives that will stimulate the income flow of the agent, because what we have seen because of the reduction in economic activities, most of these agents are not really doing much. And the implication is that I see that the churn rate is going to go high, right? If we're unable to implement measures that can drive their stimulate their income flow. And this is where I see opportunity. The individuals, NGOs, government, providing palliative measures in this period could use the agent to actually extend this. And at the same time, the financial services providers should as well look for collaborations that could, generate business activity that could support the agent to continue to process transaction within this period and stay profitable.
Based on your experience and, of course, your interactions and exposure, what ways would you like the financial service providers to really provide that support to these people who are at the field in the rural areas, because they cover broad levels across the country?
For me, what I would recommend is, one is for the health, of the agents is very important, right? So the thing is, financial services maybe through collaboration with other agencies, development agencies, could extend precautionary measures, to these agents, right? It could be first enlighten them on part of how they can safely transact within this period, provide some of the personal protective equipment like face shield, sanitizers, face masks, and any of those to protect themselves, right? And at the same time, they could as well consider maybe waiving some fees so that the agent can remain profitable within this period. These are few activities or initiatives, I think, that could support the agents within this period and keep them active and profitable.
Yeah, and then when we look at the issue of the agency banking, at this time it would have been very effective because some of the financial institutions have almost all the local governments in the country covered in terms of agency banking. This also provides the opportunity to deepen it. What are your thoughts around this?
Sure. There's a lot of opportunities, right? I think before now, there have been a kind of agency banking has become more like a buzzword in the industry. Most of financial services providers, they are reducing the way they spread established bricks and mortar branches because it's not profitable. It's difficult for you to run profitably in some areas, right? So the only channel that you can use to extend financial services is through agents. I think this is an opportunity. It highlights the importance of agency banking, right? Even for the financial services providers. This is the time for them to go back to the drawing board, come up with the appropriate strategy to deepen the deployment of agent network to continue to provide services to their customers and potential customers, and at the same time look for a way. This is an opportunity as well to see, because even within the communities, there's a lot of financial needs which agents are already meeting, and there's a kind of general understanding on the services that the agent could provide. So that level of acceptance provides opportunity for the financial services providers to deepen the deployment of agent networks in rural areas.
And in terms of engagement and even the necessary capacity building, those forums that you've been having, I know you covered 5 of the regions in the country, trying to make that case for us to achieve the financial inclusion target for this year. How has it been in terms of your activities? I know that you can't do much like on the field, but of course we have digital engagements, virtual engagements. What has it been like for EFINA this period?
So I think the effort is something that needs to be sustained, right? Unfortunately, now we can't do that because there's little limitation in terms of personal contact and public gathering and all of that. But as you rightly mentioned, we're using digital channels to continue to extend those important information about agency services, benefit, and also opening various feedback loops to understand the pain points of the agent and identify ways that we can as well support. We are working collaboratively with various stakeholders, both the providers, SANEP, and other organizations, to see how we can support the agent, identify some of the problems within the industry, and how the way forward. All right. And I think post-COVID, there's need for us to sustain activities so that we can, it's going to be more like a measure to reassure the agents of government commitments to the agency business, support them. And I think with such an initiative, we'll be able to, reactivate some of the agents that may go dormant because of the current decline in economic activity.
I also know that EFINA supports the FinTech. You work closely with the FinTech industry, and they are very critical to financial inclusion through products. I mean, in the UK, we are seeing what FinTechs are doing in terms of provision of products. Like they came out with a COVID product for small, medium enterprises, and those at the micro level to support them, and even those who are in sectors that are in the minimal space, but providing services to them to continue to be engaged during the pandemic amidst the challenges they are facing. What's the interaction and engagement with the FinTech community, and what products are you seeing coming up or developments from that space?
I think that FinTech community, they are very important to the financial inclusion agenda, right? And they have been doing a whole lot. About last year, right, EFINA moved a little bit from focusing on licensed financial services providers to looking out for some of these fintech that may have a wonderful idea, innovative idea that can deepen financial inclusion, access to finance in Nigeria. And we launched our FinTech Challenge Fund, through which we gave about $2 million to about 6 fintechs. They have been doing a whole lot, and we see a lot of opportunities around this fintech community. We're going to sustain that. We're going to continue to engage with them, and as well as come up with initiatives that will trigger more thinking, among these fintech community to come up with more innovative ideas that could help us to deepen, achieve the financial inclusion target. So as I mentioned before now, fintech community, they are very important to the financial inclusion agenda. So I believe that we're going to continue to engage them, continue to use them to achieve the target.
And in your surveys and your reports, part of the issues you've highlighted over time are the challenges for the women who face poverty, both in the rural areas particularly, even the Northwest, which has always been in the high level of poverty issues, and even engaging the youth, particularly the millennials, to understand the value of financial products and services. How will this period reinforce that need to really deepen these aspects, and how would you drive this advocacy post-COVID-19, as you've been doing?
Yeah, women is also part of our strategic focus, at the same time, modern Nigeria and the youth. We believe that women have a huge role to play in terms of driving financial inclusion and overall promoting overall economic well-being of households. We have interest in women, and most of our interventions have elements of women, northern Nigeria, and the youth. Last year, we partnered with the CBN to conduct more study, more like a deep dive to understand women's financial inclusion, to understand some of the factors driving exclusion among women. Because if you look at the exclusion rate, and if you look at the proportion among women, they have about 55% of those that are 55.9% of those that are financially excluded are women. So we try to understand what are the factors driving exclusion among women, because we know that women are very important to the financial inclusion agenda, and as well promoting the general economic well-being of households. So we conducted a study and we disseminated that information as well. And it boils down to some of the areas highlighted is about education and trust and so many other elements as well. So we're constantly engaging with financial services providers, stakeholders, to identify ways that we can drive more participation of women in both agency banking, because we believe last year we did a kind of index research to understand how can we drive more women financial inclusion, and we saw that utilizing female agents can as well encourage more women to come on board, especially in areas that areas where we have gender segregation, like in the north. Women are more comfortable transacting with women. So we're encouraging more women to come on board as financial services agents, to be able to render financial services to women and encourage them to come on board the formal financial system. At the same time, all our programs, we put our gender lens to ensure that it has elements of women in it. So when we give grants to financial institutions, a big chunk of their target centers around women. So in terms of driving, in terms of uptake of financial services, we have a chunk of the target centered on how many women are on board, depending on the product that is being offered. So we are actually, those areas, women, northern Nigeria, are quite important to us. And if you look at the exclusion rate, Northwest and Northeast has a whole, both regions have a whole lot of those that are financially excluded. Like in the Northwest, we have about 62% of financial exclusion. And in the Northeast, we have about 68%, which is really huge. So most of our interventions are actually centered towards those areas to see how we can help to, reduce the exclusion gap in those places.
And Henry, now we're seeing a new wave, a need for deepening financial literacy in Nigeria. We're seeing regulators in the financial market taking that seriously, and they're doing financial literacy. We're looking at even issues around capital market studies, financial studies, deepened from the secondary to tertiary institutions. Will EFINA also be looking at partnering and supporting that, because there should be a role between financial literacy and deepening financial inclusion?
Sure. Financial literacy is very important aspect of our program. So we work closely with the stakeholders, and we're going to continue to deepen that relationship. We want to drive more financial literacy, because when you drive financial literacy, individuals that you're targeting will have the right set of skills, knowledge that could allow them to make the right financial decision in terms of their financial resources, and that has potential to drive financial inclusion. So without financial literacy, there's no way you're going to struggle in your financial inclusion efforts, right? So definitely, we're going to be working closely with the stakeholders. We're going to be pushing out a lot of financial literacy initiative to see how we can, drive that in Nigeria.
And what policy steps would you like to see more to strengthen this drive for financial inclusion? At least we can hit a good target if we can make that 20% exclusion in 2020.
I think at this point, generally, I would. What I think is that there should be regulatory flexibility post-COVID, right? But at the same time, I think that the regulator should monitor closely to ensure that consumer protection and ensure that consumers are not exploited. So there should be there should be regulatory flexibility. And also see opportunity for the NICOM, National Insurance Commission, to push the adoption of microinsurance, which I think is very important. There's need for them to review the landscape to understand obstacles to adoption and make necessary policy change. Also, the same thing applies to PINCOM as well. I think there's need for us to deepen the adoption of micro pension, especially among the low-income segment. There's need for also for the regulator to come up with policies that could encourage more uptake.
Wow, very interesting conversation with you, Mr. Henry Chukwu. It's been nice hearing your thoughts around deepening financial inclusion. I most appreciate what the Enhancing Financial Innovation Access, where you're the program specialist, is doing to help support our quest to achieve deeper financial inclusion. Hopefully we can achieve a good target, if not even achieving the 20% exclusion this year amidst the COVID-19 disruptions. But we appreciate the efforts that you're doing, and we expect that you continue to engage stakeholders in this sphere, and also regulators and policymakers to see how this happens. I also appreciate the fact that you're taking note of the challenge of poverty, and of course the Northwest, the Northeast, the women, and also the youth who need to be engaged and brought into the financial net, inclusion net is very important too. And also take note of the agency banking, which needs to be deepened in this period, very important. And the support that needs to be given to the financial services agents who can reach all the local governments in the country, 774 of them, and the rural areas, to really provide financial access to the rural people. That is very important, because with financial inclusion, we can now talk about inclusive economic growth, and that will really be good for Africa's most populous nation, Nigeria. Thank you for the time, Mr. Henry Chukwu, Program Specialist, EFINA. Thank you. Thank you very much.
Thank you.
And that was the conversation on post-COVID-19 deepening financial inclusion in Nigeria, and we had in the studio virtually Mr. Henry Chukwu, Program Specialist, EFINA. Definitely, despite the challenges, Nigeria has all it takes to move on and deepen financial inclusion. All stakeholders must be on deck to ensure that this happens. We'll continue our conversation 10 a.m. in the market review. You can join our website www.proshng.com to get news, reports, and analysis on developments in the economy and the financial markets. Till we come by 10 a.m., stay blessed, stay safe. Very important for you. Thank you.